What the heck is happening with this housing market? This is Alex Rivlin with the Rivlin Group, and on this video, we're going to talk about the fact that the economists predicted a V-shaped recovery, and that's exactly what happened. Average FICO scores continue to increase. People use the stimulus money to pay down debt, to save money, and a little bit for spending. Forbearances are way down. Inventory is extremely low, and houses are much more affordable than you think. So let's get started. Okay, so as I mentioned, the economists predicted a V-shaped recovery when the coronavirus first started. And that's exactly what we've gotten. As a matter of fact, if you look at the chart attached, you'll see that we're even in a slightly better V than most of them predicted. Now, we know that there's a second wave going on right now, and we don't know exactly what that's gonna bring, but between all of the COVID fatigue and the bullishness around all of the markets, including the stock market, which, as you know, dropped way, way low, we expect the economy to continue trucking forward. Average FICO scores have also increased. Believe it or not, people being buckled down in their homes have paid some debt off, have decided to lower some of their bills, and as a result of being at home, they're not spending as much money. So with paying down that debt, not spending as much, FICO scores have actually increased from an average of 706 in April to an average of 711, 5 points higher. So that's fantastic overall for the housing market and credit in general. So 35% of the people that received stimulus money actually paid down debt. 36% put the money in savings, and 29% increased their spending. So overall, contributing back to the GDP, but doing a great thing for themselves and their families in saving money or paying down debt and having less of a burden. I also mentioned that forbearances are lower. Of the 5.76 million families that were granted a forbearance, 2.4 million just about extended the forbearance. 2.3 million went ahead and started paying again while they were still in good order. 500,000, believe it or not, paid their mortgage off completely. 481,000 are actively negotiating with the bank as to how to resolve the forbearance issue. So they're still in flux, and 80,000 actually went delinquent and will either get foreclosed on or have to short sell their home, or they could list their house for sale and pocket any of the equity left after paying off their actual mortgage and any of the money accrued during the forbearance period. Inventory is dramatically low. And people wonder why. Well, we've got a few different things. Listings are not happening as much. There's some uncertainty around listings. Kind of an interesting time to be uncertain while prices are continuing to go up and mortgage rates are at the lowest that they've probably ever been. I mean, we are hitting record lows on a regular basis and fluctuating right around those very, very low, high twos, low threes. So really fantastic. And then housing is affordable. Now I know this is where you're gonna go, come on, Alex. All right, I believed everything you said up till now, but this seems ridiculous. Housing prices are out of hand, right? Well, you know, the housing index talks about your ability to pay and income levels versus your payment level, not necessarily the overall value of the house. So you can see in the chart that is displayed here that the housing affordable index is at one of its highest points other than after the crash. Well, if you look through this entire chart going all the way back 30 years, this is the second best affordability market in the last 30 years. Why is that? Well, with the extremely low interest rates, your dollars go a lot further. So whether you were looking at a $300,000 house or a $400,000 house, that payment arguably could be the same with rates from a year or a year and a half ago at 4.5% and 5% versus rates today at 2.75 and 3. That's why housing has become very, very affordable according to the index. So now we're gonna bring it local, because back in the day, I watched a comedian and he talked about the weather. And when he was talking about the weatherman, he said, the weatherman would say, let's go to the map. And he would say, let's go to my window. That's what I want to know, is what is the weather right where I'm at. So now we're going to talk local. We're going to talk Henderson. We're going to talk Las Vegas area. We've increased in regards to number of units sold from October of 2020 versus October of 19. We're actually up 11.2%. So double-digit increases in the number of properties actually sold in the entire area. It's absolutely phenomenal numbers. And by the way, this is always the time of year that we typically see a slowdown. And we're still seeing the ramp up from a couple different things. One, pent-up demand from the little bit of slowdown that we did experience and contraction in the market in April and May, as well as people being in their homes for so long, realizing that they want more out of a home. So they're willing to sell theirs to buy another one or get out of their apartment and be a first-time homeowner. So the market is extremely hot in that way. We also have an increase in median price. So the median price has gone up about 10.8% in the overall Las Vegas region. When it comes to Henderson specifically, they're following the same trend, and the average price of a home sold in October was $493,000 in the Henderson market. So if you were thinking about selling and you were looking at moving out of state or staying here and buying something, now is an absolutely great time. And for people that think the market's going to continue going up and want to time the market for it going up, whatever you're planning on buying, that's going up too. So it's best that you take advantage of the equity that you have right now, as well as the interest rates that are so low, because maybe they go up in relative fashion and the interest rates also go up, which is predicted throughout 2021, 2022, and 2023. Now I want to talk about availability. There is less than 2 months of inventory. As a matter of fact, last week, I did my numbers and it was less than 6 weeks of inventory on the market. Listings are not coming on as fast. As I said, there's a number of people that cited that the reason they're not listing is uncertainty. We always see it a little bit around the holidays because they're looking at people coming in and out. Well, I'll tell you what, if you were thinking about listing your house and that is something that you were talking about and you didn't necessarily want people traipsing through the house because you were gonna have people there for the holidays, well, I'll assure you, if you price it right, which is the most effective strategy right now because you'll get more viewers, potentially multiple offers, and drive the price to higher levels than overpricing it and negotiating down, the best houses are selling very, very fast. I'm talking first weekend, oftentimes a solid offer or possibly even multiple offers. And to prove exactly what I was just talking about, 70.3% of all listings are accepting an offer in under 30 days. That's a huge increase because last year at this same time, it was only 52%. So dramatic increases in regards to that. And like I said, we're talking about the under 30 days. I'm seeing a dramatic amount of them with an offer when they're priced right within the first 2 or 3 days. So the market is hot, great things are happening. We do have some challenges with our economy and unemployment. One thing that you always have to keep in mind is we have 2.3 million people here in the greater Las Vegas area, and our brother right next door in California has about 40 million people. It takes a very small percentage of those people to want to move here in order to prop our market up. So with potential taxes going up to 16% in California, as well as the ability to work remotely when you're working for a lot of these different companies and have a desk job that was previously in office, there is a lot of opportunity for this market to continue to flourish as it has over the past several months. So thanks for joining us today. We hope that gives you a lot more information around the national market as well as the local market. Once again, this is Alex Rivlin with the Rivlin Group. Click below to subscribe to our channel to see more great information like this. We know Henderson.